Hello, everybody. Welcome to the Trading with Ashley show. Now, before we get started, I need you to do two things for me. One, I need you to make sure you are subscribed. I give out a lot of different trading opportunities like this one, and I want to make sure you don't miss not one of them. The second thing is I need you to sign up for my email list below. It's a way for us to stay in touch, and I'm constantly sending out a variety of trading support that may help you in your quest to become a better trader. Okay, now that we've got that out of the way, let's talk about the subject at hand. We have Tesla earnings, and earnings will be after the bell tomorrow. So I was playing around with different trades today, and I wanted to offer this one to you if you have a little bit of a risk appetite. Now, I am going to try to make it to where it's not extremely risky. I'm actually going to use technical analysis and expected move to arrive at the right strike price to put the odds in our favor. But anytime you do credit spreads, and this one will be a put credit spread, there is an element of risk to it. And the reason I like to share that is it's very different than just selling puts. So let's talk through that. If you sell a put, the worst thing that can happen in that scenario is you're put the shares. But as long as you selected a good company and a fair strike price, then if you're put the shares, all you have to do is have patience and wait for that stock to rise, and then you can start doing something with it. You could sell calls against it. You could sell it in profit. In fact, that's what happened to us in our trading community. When we had such a rough couple of months there at the beginning of the year, we were actually put the shares on several stocks. But now we are able to sell calls against those stocks, and they are in significant profit. So our returns are going to be really great once these shares get called away, because we had very fair strike prices at the time. We were put the shares, and now we get to enjoy not only selling the call premium, but all the stock appreciation between the time that we were put the shares and the price that they are now. That's why the wheel strategy is very safe. Now, when you're talking about put credit spreads, well, that's a directional bet. When you do a put credit spread, what you're doing is you're selling a put, but you're also buying a put. And putting those two trades together, it's a directional bet, meaning you want the strike price to stay above your sold put. And after you put on the trade, the closer the strike price goes to your strike price on your sold put, that's going to show that you're losing the trade. Now, if the stock starts to rise away from your sold put portion of the trade, then you will notice that your trade is starting to profit. So that's how it works. And I actually shared a great hack with my community today. I go live with them a couple of times a week, and I always offer them a lesson. And I taught them how to break apart a spread that's working against you to actually make more money than if the spread worked in your favor. So if you're interested in things like that, you may want to consider joining the community. I share a lot of different trading ideas and different ways to try to make money and be nimble when the market does the opposite of what you thought it was going to do. Now, here's what we're going to do today. We are going to look at Tesla, and we're going to try to determine, based on technical analysis and the expected move, what is a potential safer trade for earnings. And I wanted to share with you, I have no idea what earnings is going to be like tomorrow. It's after the bell. I don't know if we're going to see the price rise or fall. But what we will be taking advantage of is the elevated IV. When you are either selling a put, selling the call, or you're doing a put credit spread, elevated IV actually helps you make more money. Then when all the chaos has died down and all the music has stopped, then you can buy that contract back for usually a lot less, especially if the price has worked in your favor, like I described earlier, and it's moved away from your strike price. Let's go check it out. Before we attack this trade, let's look at technicals just so we can make heads or tails on what we are looking at. Now, I'm looking on the 3-month chart for Tesla. And the first thing that stands out to me is the RSI. So we're still in a bullish mode. We are at 56 on the RSI, meaning there are more buyers than sellers at this point. Now, when you look at these Bollinger Bands, it looks like we're right there between around 292 and all the way up to 341. And also, I do notice that yellow line right there, that is an important moving average. That's the 100-day moving average. So this should serve as a level of support. Also, I like to look at candle touches to see where the support is. And if you look right here, right there around 289, it looks like we have a little candle cluster, some touches right there. And then if you go further down right here, if we go below that, it looks like there is some support right there, maybe around that 283 mark. So just keep this in mind. There's a lot going on right here at this 290 mark. And then from a psychological level, if Tesla were to dip below 300, those individuals that feel like, those traders that feel like it's going to go much higher in the coming year, they may go ahead and start to buy Tesla under 300. So keeping that in mind, we are going to go look at the expected move on Tesla after earnings, and that's going to help us make an even better decision. Now, to calculate the expected move, I did an entire video on this, and I will leave that in the description for all of you so that you can do this with any stock, and it'll change throughout the day. So you can, right before you place a trade, you can look at it and see what it might be. So I'm going to show this to you. So here we are right here on 7/25. That's Friday. And then what I want to do is I want to go down to where we are trading right now. Because if you look down here at where we are, 330, the best way to do this for the expected move formula, there's a couple of different ones, but what I like to do is I like to use the one that takes you adding an at-the-money put premium and an at-the-money call premium, and then you multiply it by 0.85. Why 0.85? Well, that represents one standard deviation, and that helps to give you a more accurate reflection of where the price movement may go. So if you take the 1080 and then you add it to the 1317, that equals 2397. So if you take that and you multiply by 0.85, that is going to give you a 20-point move either way. So the way you figure this out is you take the 330 and you add 20 to it. So it's saying that based on where people are doing the puts and the calls on the option chain, that Tesla could potentially go up as high as 350 by Friday, or it could go down as low as 310. Now, of course, this could skew higher or skew lower, but it does give you a little bit of a roadmap so that you can get a better idea of what might happen. Once I get to the option chain, I want to remind you of our different levels. So 330 is where we are now. The expected move is down to 310, potentially. It could go lower. And then we had all that support that we saw at the 290 area, and that was on the technical analysis. So I'm going to start right here at 290. That gives me quite a buffer from the expected move, which is 310. And what I want to do, I'm going to sell this put right here. This is the 290 put. I'm going to receive 450 for it. Now, keep in mind, if I just did this portion of the trade, I would need $29,000 in a cash account to accept ownership of 100 shares. But I'm not stopping there. I'm going to add one piece to the trade that's going to reduce the capital requirement, and it's also going to protect me from a huge loss if it dips below 290. For this portion of the trade, I'm going to go down to 280, and I am going to buy this put. I'm paying $315, but that's okay because I'm getting $450 right here. So I get to keep the difference between $450 and $315. My exposure on this trade is the difference between $290 and $280. Well, why is that? Well, if I am put the shares at $290 a share, having this purchased put allows me to sell the shares for $280. Even if it goes all the way down to $200, I can sell them for $280 as long as I have this purchased put open. And that requires less capital when you do a put credit spread. Now, I put 5 contracts in here. This can flex to the amount of capital that you have so that you ensure you have proper risk management. But by doing 5 contracts, it's requiring $5,000 to put on the trade. Now, for this, if I put my net credit at a limit of $150, it won't fill unless we get to that $150 mark. That's going to offer me $750 for this trade. Now, my max risk on the trade is $4,250 because it required $5,000 to put the trade on. However, I am receiving that large credit. So this would be $750 that I would be able to keep by August 15th as long as Tesla stays above the 290 mark. Now, if it does not, if we get, let's say we get up to a few days before and Tesla is sitting right there at about maybe 295, well, that's a little bit risky of a trade because at that point, this credit spread that I received $750 for to get out of it is going to cost me more money. But it would be better if you have a small account to go ahead and buy it back at a loss before the strike prices actually breach that 290 mark. Now, if I get to a few days before and Tesla's sitting well above $300, then I would feel more comfortable allowing this to go to August the 15th. The other thing to consider is if after earnings, if we end up shooting very high, then we could more than likely go ahead and buy this back and keep quite a bit of the 750, maybe 50% of it in just a few days. So that's how you would look at this trade. That's how you would manage it. And that's how you would decide to get out of it. This is not a set it and forget it trade. This is an active trade that you do want to monitor day to day, just so you can ensure that you stay safe. I hope you found that helpful. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, if you really like what I was sharing with you about the expected move on Tesla, I did an entire video dedicated to how to calculate the expected move. I'm going to leave that video for you. I'm going to leave it for you right here.